Hi everyone, today let's start a new series called Money Moves. I plan to do this series every single Sunday to show what I've been buying and what I have done with my money this week. So this week I was doing some research and I was looking at exactly what percentage of stock I own in my overall portfolio. And if you look here, the general rule is 100 minus your age. And because bonds have been yielding less and less, currently the 10-year Treasury bond is yielding less than 1%. This rule has changed to maybe 110% minus your age or 120% minus your age. The point is the consensus on the amount of stock that you should own has gone up by percentage. And I will cover later that I have not met this percentage. As always, there will be some jelly at the end, which is something I enjoyed outside of the markets. If you have big dreams like buying the Olivia, or if you're just getting started on your financial journey, definitely like and subscribe. The Olivia used to spend her time searching for NATO submarines in the northern Atlantic, but now she has a beautiful interior for passengers. You can tell she has a different look than most modern yachts, but she still has all of the luxury. She is for sale for $27 million. To keep your dreams at the front of your mind, like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. First up, we have worthy bonds. I use this as part of my overall savings plan. These are fully liquid bonds that have a 5% return and they compound daily. So you can see here, month over month, how much money I gain each day and how much money is gained on the month. And then if you click down here to the day, you can see you receive a little bit more interest every single day. So if you do the math on this, it's a little bit over 5%, which I did in my savings plan for maximum growth video, which I will link in the description. So far, I haven't contributed any money to worthy bonds this year, and that's because I'm currently overweight on bonds. But you can see here I've earned over $240 in interest this year. If you're interested in investing with worthy bonds, go ahead and use the link in the description, and they will give you one free bond with your first deposit to help you get started. Next up is Fundrise. You can see here since last week I deposited $200 and it grew a little bit over $1 in appreciation. You can see here my total returns since I started investing in April of 2019. I currently have an advanced account, which just means that it's over $10,000, which allows them to diversify your holdings. And I'm in the long-term growth plus plan because my planning horizon is a little further out for this particular investment. Going over to goals, I want to reach $750,000 in this account by May of 2040. And to achieve that, I need to deposit a little over $400 before the end of the month. I do have an auto invest going in next week, which will help me reach that goal. I have lots of videos about Fundrise, and I will link my deep dive for Fundrise in the description if you want to see it. Also, I will put a link in there if you want to invest with Fundrise, and they will waive your fees for 90 days if you use that link. Next up is Lending Club. Peer-to-peer lending. The rate of return for this account has continued to go up, which is a little surprising. I expected the rate of defaults to go up at least a little bit. I know that Lending Club has put in some systems that allow some borrowers to forego their payments for a short amount of time, but I still thought it would be a little bit worse than that. We'll see what happens once those things lift, but for now the returns have been great. I'm up a little bit over $50 in the last week, which is what you like to see. Moving on to my IRA with Lending Club, the returns here are extremely outstated because this IRA account is pretty young. And as the loans mature, they will probably decrease in rate of return. I will get a few more defaults, and this number will get closer to what my other account is currently yielding. But so far, it's been really nice recently. Again, I have a deep dive, which I will put in the description if you're interested in Lending Club, as well as a sign-up link, which they will give you a little bit of money if you invest with them. But just so you know, you do have to invest quite a bit of money to receive any money from Lending Club. They are still offering a 0.5% bonus on anybody who invests through the end of August, which I am currently taking advantage of as I continue to reinvest with them. All of those credits will be deposited into your account on September 30th. Next up is my retirement account. I tracked this one on an Excel spreadsheet because the website that they use doesn't really have a very good overview of exactly what it looks like. So here you can see the different funds. I have an L2050 fund, which is a retirement fund for 2050. And then I choose to invest in a couple of different funds a little bit more heavily than the 2050 fund does. So then I have those isolated, and then I have a cumulative amount here, which is what I go off of for my graph. You can see here I have almost 50% in the S&P 500, which is common stock. If you want to know in depth what all of these funds are, go ahead and go to my TSP video, which will be linked in the description. But small cap stocks, this is a total stock market fund. International stock, this is government bonds, which are primarily long term. And then corporate bonds, which is just the Barclays Total Bond Market Index. I invest in this account every single month. It comes directly out of my paycheck, and I believe we're right at where it was before the downturn. It's been a few months, so it's gotten a few deposits. I'm not sure exactly, but I think it's right around where it was before the downturn. Next up is my M1 Retire account. Now, this is still just a taxable account, but I am contributing to it pretty aggressively. And I want to have access to it prior to 59.5, which is why I'm using a taxable account. You can see I've been contributing to it pretty aggressively, and it's still down just over 0.5%, which is fine. And the main reason that it's only down 0.5% is because I moved a pretty significant portion of it, a little bit more than 19%, over to short-term government bonds. And this was in order to protect some of the growth. So I figured there was going to be a little bit of a downturn, and sure enough, there was. And I transferred 19% of this overall account into short-term government bonds, and that has protected quite a bit of my growth. You can see here I have a transfer pending, $200, that will buy 62 different stocks, and that will execute on Monday. If you're curious to what all of these different holdings are, I do have a video, which I will link in the description, that goes into great detail on this portfolio. On to my higher yield savings account. I started this account because after I got to about 3 times my monthly expenses and emergency savings, I felt that I wasn't getting a lot of value out of continuing to contribute to, say, a high yield savings account and only getting a very low percentage after that level of savings. So I decided to start a market-based savings account. And that's basically what this is. You can see here it's up quite a bit overall because I've been contributing to it pretty aggressively since this downturn. Looking at some of the holdings, I did the same thing with this account, just a little more aggressively. So I moved 40% of my overall portfolio into short-term government bonds, which was a little under $5,000. I'm still holding Realty Income Corp because I do believe pretty heavily in this company. And I also own some midterm and some long-term bonds and some higher yielding bonds. And I also have long-term corporate bonds. So I have several different bond funds in this account right now. And that is up over the last week because of the fears of the economy right now. If we do get a second drop, which I think we might, I don't think we'll quite retest the lows of March, but I think we will get another buying opportunity. And as that happens, I will go ahead and liquidate some of the short-term government bonds and put them back into some of these market funds. So I have VIG, which is a dividend appreciation fund. And then scrolling down here, I do have a couple of other ETFs, which generally mirror the S&P 500 dividend stocks. So this is my overall financial picture. I keep track of where every single dollar is. I also keep track of where I have debts and where I have liquid cash versus investments. So this chart in the top right is where all of my value is at. And then for this one, I take out cash because cash is not an investment. I still include home equity here because it's kind of like an investment, even though it's more like a savings plan. Then my clear view of investments is just my overall long-term investment portfolio. So you can see here, I'm pretty heavy in bonds right now at 25%. And that's kind of on purpose because of those moves I made on M1 Finance. I also have quite a bit of money in Lending Club, which I do consider to be basically a bond. And my stocks are only at 40%, which at the beginning of the video, I talked about how I'm pretty low in stocks and that I really should be closer to 60 to 70% stocks. And that's really what I'm working towards right now. So I'm continuing to invest in stocks and I'm continuing to invest in real estate. And those are the two slices that are the most underallocated. If you found any of this informative or useful, definitely like and subscribe. Also, make sure you hit the bell so you don't miss any of my future updates. Of course, none of this is financial advice. This is just what I'm doing with my own personal money, and always consult your own financial advisor before you do things with your money. And with that, let's get to the jelly. So today's jelly is Kevin James. He really started a YouTube channel pretty recently, and he's been putting out some pretty high quality comedy. This one is called CouchX, which is a spoof of the SpaceX launch. And here's what that looks like.
He pops it up. Crocker's there to make the catch. And that's the ball game, folks.
The spacecraft equipment is going to internal power. We'll be looking for an ignition of those 5 first stage engines. 10, 9, 8. Ignition sequence has started. 6, 5, 4, 3, 1, 0. Building up to 7.6 million pounds of thrust. Liftoff at 2:13.
It's a beauty. It's another beauty.
And it has cleared the tower.
Oh, yeah. Oh, there we go.
I'm Big Lou, and I want to invite you to Puri Motor Spa. It's never been easier.
Clearly, Kevin James is very funny, and his YouTube channel is no different. Comment down below what you thought of his spoof. Definitely like and subscribe so you don't miss any of my future videos, and have a great day.